We're going to jump right into a massive quarter from the commercial real estate giant CBRE. The results they just dropped for Q3 2025 are frankly pretty stunning, and we are going to unpack exactly what's powering this incredible success. And you can feel the confidence coming straight from the top. The company's chair and CEO, Bob Sulentic, really set the tone here, pointing out that this quarter wasn't just strong. It actually blew past their own internal expectations. That's always a good sign. So what does a quote-unquote excellent quarter actually look like when you get down to the numbers? Let's take a look at the big headline figures that are making waves. Okay, the first number that just jumps off the page is 34%. That's the year-over-year growth in what's called core earnings per share, or Core EPS. For anyone watching the company's health, this is a huge indicator of profitability. And a jump this big, wow, that is seriously impressive. Now, you might be wondering, what exactly is Core EPS? Well, if you're not a financial analyst, just think of it like this. It's a way to get a cleaner look at the company's true performance. It kind of filters out some of the accounting noise to give you a clearer picture of how the actual day-to-day business is doing. And what's the engine driving that incredible profit growth? This number right here, a massive $10.3 billion in total revenue just for the quarter. That's up 14% from the same time last year. Just a huge, huge top-line number. Okay, so those are the headline-grabbing numbers. But the big question is, where did all this growth actually come from? Let's peel back the layers and see which parts of the business really fired on all cylinders. So to really get CBRE's performance, you've got to know about the two sides of their business. On one side, you have the steady, reliable, resilient businesses. Think long-term contracts. And on the other, you have the deal-driven, transactional businesses. The key this quarter, both of them had a fantastic run. Let's start with their advisory services segment. This is really the heart of their transactional business. It's where all the big property sales and leasing deals get done, and it saw revenue just shoot up by a remarkable 17%. And when you dig into the details here, it's kind of staggering. Global property sales revenue, up 30%. That massive 53% surge in the Asia-Pacific region is just a wild number, a real standout. Here in the US, sales jumped 32%. You know, a lot of this is being fueled by these booming sectors like industrial properties, thanks to the endless growth of e-commerce and data centers, which are just in ridiculous demand to power all our cloud computing and AI. All right, now let's flip over to that resilience side of the business, the building operations segment, the part that handles stuff like managing facilities day to day, posted really steady and impressive growth of 13%. And this wasn't just a rising tide lifting all boats. No, this growth was actively fueled by winning new clients and snatching up market share, especially in the Americas. And look, you see that theme pop up again. Data center hyperscalers are a huge driver, along with big client wins in sectors like tech and healthcare. The project management segment was another absolute powerhouse. A 20% revenue increase here really drives the point home that this wasn't just one part of the company getting lucky. The strength was across the board. Okay, so strong growth is one thing, but is the company actually built on solid ground? A great quarter doesn't mean a whole lot if the balance sheet is a house of cards. So let's take a look at the financial bedrock of the company. First up, let's talk about something called free cash flow. It's a super critical measure of financial health. Basically, it's the actual cash a company has left over after paying all its bills and investing in its own future. This is what gives the company its flexibility, its power to make moves. And would you look at this? You can see just how much cash CBRE is churning out. In this one quarter, they produced $779 million, a huge jump from last year. And that brings the grand total for the last 12 months to nearly $1.5 billion in free cash. That is some serious financial firepower. Now, for another key metric of financial health, 1.23x. This number is the company's net leverage ratio. In simple terms, it's a way to measure how much debt a company is carrying compared to how much it's earning. The key takeaway here is that lower is always better, and this ratio is extremely low. It means their debt is super manageable, way below the 4.25 limit set by their lenders. This points to an incredibly strong and secure balance sheet. They are built on solid rock. So, with a stellar quarter in the books and a rock-solid balance sheet, the obvious question is, what's next? Where do they go from here? Well, let's take a look at the company's own forecast. It's probably not a huge surprise, but after a quarter this strong, CBRE is feeling pretty optimistic about the rest of the year. So they've officially raised their full-year earnings guidance for everyone to see. And let's get specific. They used to expect that core EPS number to land somewhere between $6.10 and $6.20. Now, they've bumped that up to a new higher range of $6.25 to $6.35 per share. And let's be clear, this isn't just a tiny little nudge. This new forecast implies 24% growth for the whole year. But even more importantly, it puts them on track to be 10% above their previous all-time earnings record. This isn't just a recovery. This is them setting a whole new high watermark. Which, leaves us with a really fascinating final question to chew on. Is CBRE's incredible performance a story about one single company's unique strategy and just flawless execution, or are we actually seeing the very first signs of a broad, powerful recovery across the entire commercial real estate sector? Now, that is the billion-dollar question to watch.